it's a resilient market, I mean, to say the least. The fact that yesterday too, while we were off the day's peak, we were also off significantly from the day's highs, irrespective of the kind of weak handover you had from the global cues. We chugged along pretty nicely, and that's exactly what we were talking about yesterday as well, right? That we're our own ship. We're not really navigating the global seas at this juncture.
Yeah, Sasha, the Bulls have, in a sense, managed to engineer a very decent comeback. From the market lows, and the fact that we held out despite this global ripple and concerns on the commodity market, it's quite heartening. The large reason why I think that is happening is because there is a lot of FOMO effect which now suddenly is there in the market. Typically, it's the institutional investors who drive the market. Now it's the retail activity which is forcing even institutional investors to really take notice of what is happening in the market. So the comeback in the market, I think, is quite heartening. Even though the bank nifty has remained sideways, I think the market breadth has been nothing short of what could be called as quite large. In last 3 days, volatility has been down. In last 2-3 sessions, rank mid-cap stocks are moving higher. So the fabric of the market, or the texture of the market, is quite decent, which clearly means that from a market standpoint, that midday turbulence or that March storm has clearly come and gone. So what is really now suddenly driving the market in isolation? I guess it is the seller of May, seller of March, who really wants to come back and capture whatever they lost out in the month of April.
Yeah, and every dip is getting bought into. Even if you look at the the kind of recovery that we've made from the recent lows, the kind of move that we had in yesterday's session alone, some of the key sectoral indexes, the PSU banks, the small cap 100 index as well, IT, mid cap 100, banks, the Nifty per se, they've all done very well. And even the quantum of names which are sitting at a life highs, irrespective of what the rest of the market, the rest of the globe may be doing. Shriram Finance, M&M, Tata Steel, they're sitting at life highs for themselves right now. But commodities, of course, is another moving part.
It absolutely is, Aisha. So they're not to be forgotten, given the fact that gold prices actually hit a new peak only in trade yesterday. It's the 4th consecutive day that you're seeing record highs on gold prices. Largely the escalating tensions in the Middle East, the interest rate cuts from the US, all of that seems to have heightened the appeal of gold. And that's not alone. The entire commodity cluster that we're tracking, silver, for instance, is perched at a 2-year high, and some of the other commodities, we're looking at the 1-month move for copper, 9%, aluminium, zinc, and Nikunj, we're seeing that translate as well into the entire metals basket. The fact that the likes of Hindustan Copper, Vedanta, etc. have been smart movers.
See, there is both good and bad. Copper going higher, it means the world is looking better. Oil prices going higher at a time when there are no political tensions, there is no concern of supply disruption. That clearly means that the commodity market is indicating that the demand is going to be strong. Now that's the good part, which is that we are getting what could be called as a deep swell in the commodity. But good could become bad and bad could become ugly. I don't think in the move in the commodity market so far has become bad or ugly, but another 5% for crude from here, another 5-7% for commodity prices, another 10% for metals, that good actually could become ugly. Nobody will wait for it to become bad. Now, just when markets were convinced that, okay, we've seen the back of inflation, central banks would, in a sense, follow the gentle glide path of cutting interest rates down. Just when RBI governor indicated that inflation is coming under control, could this really be the spoil spot? Could really be the spoil spot, because markets are not prepared that inflation will come back, whether it is in the first half of this year or whether it is in the second half of this year. So I think you will have to be watchful and careful of this price action in metal stocks. But in the meanwhile, I guess the price action in metals stocks, I think, is evident. You've seen outperformance in almost all major ferrous and non-ferrous stocks. Even a stock like Vedanta has almost gone to 300 rupees. Sales had about March end and a great year. So if you're really looking for short-term interplay, the easiest interplay is that commodities are going higher, you buy metals. Commodities, if they go higher, that's bad news for autos, and autos have started underperforming. So in the near term, I think if you're looking at a transition trade, purely a trade, maybe for a next couple of days, long metals, avoid auto, don't go short anything. I think that trade is clearly evident. It's so far it's looking okay. Markets are happy that metals are making a comeback. The first, the canary in a coal mine is that demand indicators are looking strong. But the problem with commodity is that what is looking good can become ugly very soon.
But I wonder, when will markets sit up and take notice of prices going up and the way they have?
So Aisha, it's manageable right now. But anything which is above 90 starts inching towards 100, and especially at a time when we've got general elections around the corner, markets will say, okay, what would be the approach? Will there be a fuel price cut? Will there be anything populist? The code of conduct has already kicked in. What will happen to oil marketing companies? And closer to $100 with rupee plunging to a new low, we've not had a macro ripple for the market per se. So I don't think markets are prepared for a negative macro setup. That is something which is not part of anyone's thought process right now. Because earlier, when you were making a view on the market, you would consider macro, fiscal deficit, rupee, crude. All that macro discussion is simply out of the window. What are we discussing in India? We're only discussing one thing and one thing and one thing, and that is valuations. Nobody's discussing the election outcome, nobody's discussing the pace of reform, nobody's discussing macro, nobody's discussing rupee, nobody's discussing oil, because they're not bothered. You're not there in terms of a narrative, but if you stay here, I mean, crude goes to $100, you'll have to start discussing it. So this becomes a new dimension, which in a sense, up until now has been out of the window. You don't want it to come back, but you cannot ignore it if crude goes higher.
Okay, absolutely. But let's also nail it down to those individual movers, and that's largely taking stock of the kind of Q4 updates that we've been getting within the banking arena. South Indian Bank, for instance, gross advances, deposits were strong on a quarterly basis. Yes, banks' deposits were up about 25%. RBL Bank came in with a steady growth. How are we reading into the banking sector and even some of the other companies?
Since we got numbers out from banks, so let's talk about banks. And that's why you got mid-tier banks which have come out with numbers. Then I think the growth and CASA. So what is advances? Let me break it for a view. Advances is at the growth of the book. Now RBL Bank and Federal Bank, if they've given a 20% growth in terms of advances, that means they are actually getting the complete mojo back. Advances are a function of how comfortable you are in terms of getting the liability. Now, since we've seen what could be called as a war of liabilities, at that point in time, if deposits have grown by 20% for RBL, which in a sense has had issue with its brand recall after what happened a couple of years ago with RBI, I think that is quite impressive. So for me, the big picture is that banking sector is growing. Second, mid-tier bank are getting their mojo back at a time when there is war of liabilities. And for most of the mid-tier banks, now the CASA ratio is quite impressive. I mean, Federal Bank CASA is not that impressive, but if you frankly ask me that which is the bank where today, based on these numbers, you could actually see a reaction, it's RBL. CASA is strong, advances are strong, deposit growth is also strong, and we're looking at double digit across verticals, even on year and sequentially. So the standout mover, I guess, now becomes RBL, which is cheap, which has done nothing but has scope now to outperform.
If you like this video, then like, share and subscribe to ET Now.